Good morning. It's Monday, May 10th. I'm Kenny Polcari, and this is host of the party, Morning Market Commentary. Everything you need to know to get your day started. So let's talk about it. By now, you've heard the NFP report on Friday was a dismal failure. We created only 266,000 jobs versus the 1 million that we were expected to create. Stocks surged on that news, and we'll get back to that in a minute. Democrats are going to now use this weak report to suggest that the recovery is weak and that in fact we need an even bigger infrastructure program. We need to spend more money to get the economy back on track. Investors and traders now assume that the taper conversation has been put off at least until 2022, all while the Fed will remain accommodative, keeping interest rates low. Then the conversation is what's going to happen to the tax conversation. On Friday, U.S. Treasuries 10-year dropped to 1.49% on the news and then rallied the end of the day at plus 1.57%. And this morning, they're trading like around 1.6%, so tight right in there. And the dollar index got whacked, and that's not necessarily a surprise. And really, then you're going to ask, what's for dinner? Okay, we're having chicken pieces, thighs, and legs, and breasts, and a honey garlic sauce, but we'll get back to that in a minute. So on Friday, you could hear, as the clock was ticking down to 8:30, you could hear the clock going tick-tock, until, boom, at 8:30, the Bureau of Labor Statistics, the BLS, came out and announced the non-farm payrolls report with a dismal 266,000 jobs. And I say dismal because we were expecting 1 million. So that was nearly an 800,000 job miss. It was 27% of what the median expectation was. So futures, which had been waiting patiently for this number, went into a frenzy, right? Dow futures got whacked. NASDAQ futures took off. S&Ps were down a little bit, and the Russell remained around the flat line as investors and traders and analysts and strategists all scratch your head trying to say, wait a minute, what just happened? That must be a mistake. How could we have only created 266,000 jobs when this recovery is alive and well and cities and states are reopening? Look, my first reaction was someone at the Bureau of Labor Statistics can't count, because the number was off by such a large amount. There's a disconnect somewhere. The number didn't even make sense. It was so outside of the bell curve, you almost have to push it out and just forget about it, right? And just move on to the next data point. I mean, let's be serious. 266,000 jobs when every economist and analyst on the street thought we were going to have 1 million and the whisper number was 1 million too. It almost doesn't make sense, right? But I guess you can make the argument that the number was correct, that all these people around the street that do this for a living use the wrong inputs. And so therefore they came up with the wrong number. But the inputs all come from the macro data that the country creates and reports. And so therefore it's a little bit confusing on how the inputs could be wrong. But I guess you could make the argument that the inputs are wrong. Clearly, the number came up at 266, well below the estimate was. But in any event, it's history. It's over now, right? So we have to move on. As the clock ticked, though, from 9:30 to 9:45, suddenly all the indexes went positive. The Dow started to surge, the S&P surged, the NASDAQ was surging, and the Russell stepped up, right? With the taper conversation clearly off the table now until 2022, and the idea that the Fed isn't going to go anywhere, and we can expect to hear from Jay Powell this week that, look, I told you so, the Fed's not going anywhere, and everything we remain accommodative. And then the conversation is going to be, okay, then what happens to the infrastructure and tax conversation? Well, certainly the Democrats will use this report to suggest that we need more support. We need a bigger infrastructure plan. And so therefore expect to hear more about that in the days ahead. But then how in the same sentence can they say, but we're also going to raise taxes we're going to raise federal taxes and we're going to raise corporate taxes on everybody in the middle of this weak recovery? Doesn't make sense. There's a disconnect there, right? And so what the traders and algos and investors assumed was the tax conversation is also going to get pushed back, and that spells a strong rally. By the end of the day, the Dow added 230 points. The transports were up 218 points, or 1.4%. The S&P had 30, or 0.7%. The NASDAQ up 120, or 0.8%. And that makes some sense considering the NASDAQ has gotten beaten up over the last couple of weeks. And the Russell shot higher by 30 points, or 1.3%. So let's pick it apart, right? Over the weekend, shots across the bow. Commerce Secretary Gina Raimondi coming out and disputing the argument that there is absolutely no evidence to suggest that enhanced unemployment benefits are creating a disincentive to go to work, that people are staying home because they're making more money by staying at home. All while Minneapolis Fed President Neil Kashkari, and you remember Neil, he was a former Goldman employee who came to work at the administration during the financial crisis of 2007 to 2021, but I think he left in 2012 maybe. And he's now been rewarded as Minneapolis Fed President. Now, to be fair, he's not a voting member of the FOMC, so he's got no vote on what happens to rates yet. He can opine on his opinion. And he took to the airwaves yesterday on Face the Nation with Margaret Brennan, right, that Sunday morning talk show, and said that there was, in fact, some truth to the idea that enhanced jobless benefits do create a disincentive for people to actually go out and look for a job. So this conflicting data right there. You get someone from the administration saying, oh, no, absolutely not. And you get someone from the Fed saying, well, maybe there is some truth to that. So we'll have to discuss it. But he did go on to say that we're still in a deep hole and we need to do everything we can to get these folks back to work quickly. Okay, great. No problem with that. I get that. And he's right. In any event, between the two of them, Gina Raimondi and Neil Kashkari, it just confuses and complicates the conversation. But one way or the other, it is what it is. And this story's far from over. By now, you've also heard that late Friday night and over the weekend, there was a cyber attack on Colonial Pipeline, a privately held company, but a company that runs the nation's largest refined products, oil, gasoline, kerosene, diesel, jet fuel, national defense fuels, from Houston up to New York, right? It is the largest national transportation pipeline. They get hit with a cyber attack on Friday night, which shut the pipeline down, shut it down. Nothing traveling through the pipeline, right? So you can see where this is going, right? The ransomware attack took place on Friday night and crippled the company's operations, according to news reports, in an ominous development for what it says about our critical infrastructure. And as of this morning, the company was still unable to get that pipeline restarted. And this attack comes conveniently as the energy industry is ramping up in what is expected to be strong demand in a recovering economy as the travel and leisure sector reopens, as the states and cities reopen, and as we have the start of the summer driving season, right? So demand is expected to go up, and now this transportation pipeline comes to a screeching halt. Gasoline futures shot up 4.2% last night when futures trading started late yesterday afternoon. They have since come down. They're up about 1.5% today. Oil futures shot up as well, but they've come down. They're up about 0.8% this morning. West Texas Intermediate, though, is now trading up about 70 cents to 65.45 a barrel. Look, this is a much larger problem than just this oil pipeline. Yes, it's critical infrastructure. Yes, that's a big problem. But think about the vulnerabilities created now by the technology, allowing for ransomware as a service is what they're calling it. Almost like software as a service, as if it's a legitimate business. Ransomware as a service. Think about other infrastructure. Think about the electric grid. Think about natural gas. Think about other industries. And for us, we're in the financial services industry. Think about the cyber attacks that could take place in the financial services industry. And the vulnerabilities that are out there that we're not even sure exist until we get hit by cyber attack. So that's going to be a conversation that certainly raises awareness, and cybersecurity names in the market should certainly benefit after this news today. Look, U.S. futures were up overnight. They're mixed as the morning gets started. The Colonial Pipeline story is still unfolding. They still have not restarted that pipeline, and so there's going to be a lot of conversation about that. But also, it's going to be a big week for bond auctions and economic data. As of this morning, U.S. futures are mixed. Dow futures are up, S&P futures are up, NASDAQ is down, and the Russell is down, right? But like I said, it's a big week for bond auctions. The 3, the 10, and the 30 years are going to be auctioned off on Wednesday. And investors are certainly going to be watching the 10s and 30s to see how they react. Currently, the 10s are yielding 1.6%, the 30s are yielding 2.3%. Eco data, brace yourself, because here it comes. We're going to get the CPI, Consumer Price Index, report on Wednesday at 8:30. Now, we've been talking about this. Jay Powell has made it very clear we can expect a surge in the Consumer Price Index. So we know this is coming. So it shouldn't really be a surprise, but it's going to be the extent to which we get the report. That might be the surprise. Now, the expectation for Wednesday is that month over month is not going to be so bad, right? We're looking for plus 0.2% and month over month at the core level. Not really alarming. Ex-food and energy of plus 0.3%. Again, not so alarming. But year over year is expected to jump to 3.6%, up 1 full percentage point over last month, which was 2.6%, and ex-food and energy, a jump of 2.3%. That is somewhat alarming. But considering that we've been told this is going to happen, maybe not so much, because the markets and investors should have this in the back of the head that this was going to happen. The question is going to be what happens next month, what happens the month after that, what happens the month after that, right? And also the question is, considering the big miss we had in the NFP report on Friday, is there a possible upside surprise in what we're going to hear from the CPI and then the PPI later this week? Because then on Thursday, we're going to get the PPI, which is the producer price index, right? And that is the prices that producers pay for raw materials that go into everything they manufacture. As those prices go up, the producers pass it on to the consumer through the consumer price index. Expectations for the producer price index at the core level are plus 0.3%. Again, not alarming. Month over month expectation of plus 0.4%. But the year over year expectations in the PPI are going to be stunning. Year over year at the core level are plus 5.8%, or at least that is the estimate. And ex-food and energy year over year is plus 3.7%. Then Friday is going to bring us retail sales of 1%, ex-autos and gas of plus 0.3%, capacity utilization at 75.1%, and industrial production of 1%. Those are kind of all in line. There's nothing alarming about either one of those. European markets are mixed, so none of them are really diverging much from the flat line. They're all trading, plus or minus 0.25% above or below the flat line, right? There's no eco data to report there this morning. Earnings season like here is almost all but over. And so the focus is going to return to the broader fundamental data. Friday's weak job report here in the U.S. Is reassuring what the ECB is going to do for the next couple of months. Because remember what Christine Lagarde, ECB president, said, that she's not making a move with the ECB until the U.S. Fed makes a move. And considering Friday's weak report and considering the assumption that the Fed's not going anywhere, the ECB is not going to go anywhere. As we said, the dollar index got whacked on Friday after that news came out. It sliced right through 90.50, a level where I thought it should find some support, to end the day at 90.23. This morning it's off another 6 cents at 90.17, on its way to the 89.90 level, an area where it has found some decent support. Oil, like I said, is trading up, right? It's up almost 0.5% at 65.60 as the day dawns. The Colonial Pipeline story is still going on. That's going to add another dimension to the oil price story, right? In addition to the increasing demand, this potential supply disruption is just going to add more pressure to the price of oil. If this drags on beyond today, it's going to become more of an issue, right? A successful reopening should see oil maybe retreat just a bit, but don't expect that it's going to collapse at all, because, like I said, all this other stuff is happening and demand is strong. Bitcoin is trading at 58,500. Ethereum broke 4,000, is trading at 4,100, while Dogecoin is off, right? It's trading at 51 cents. Now that's down from the 84 cents it traded at on Friday, ahead of all the SNL excitement and Elon Musk's appearance, right? So that's trading down at 51 cents. The S&P closed at 42.32. It blew right up and through the prior high at 42.18, a level where I thought once again it was going to find resistance. But that number was so weak that it created excitement in the markets, and may continue to create some excitement unless there's more detail and discussion over what this report really means and whether or not we'll see a revision next month. Look, it's anyone's game right now, right? I expected to see exhaustion, but then the government comes out with these nonsensical numbers that throws the theory into a tailspin, right? The only thing I can say with confidence is that the channel I've identified is still 3960, 4400, and we're well within that channel. I still think 4,400 is a bit of a stretch right now. I think we get there at year end, but I think right now, I'd like to say that, we're going to churn a little bit. But remember, I told you last week that Tommy Lee of Fundstrat also suggests we're going to get to 4,400. He thinks we're going to get to 4,400 before the market pulls back. I think we're going to pull back and then go to 4,400. So that's what makes a market, right? Both buyers and sellers. And if this morning's action is any indication of where the market is going, we'll probably see the S&P churn a little bit, right? NASDAQ is a little bit weaker. That will put some pressure on the S&P because there are a bunch of those tech names that are in the NASDAQ index And so therefore that will drag, if that's weaker, it'll put pressure on the S&P. The Dow will continue to advance since a lot of those names are not in the Dow. Remember what you can do. You can always text the word invest to 21,000 on your phone to get my digital business card. Feel free to download it. Give me a call. Reach out. I'm happy to discuss this or any other financial planning needs you have. Okay, so let's talk about dinner. Honey garlic. It's a honey garlic glaze over chicken parts. So again, I like to use thighs in this dish because thighs are dark meat. Dark meat is juicier and sweeter. You could certainly use breasts, but remember that breasts will be a little bit drier. Either way, you're going to need the chicken parts, right? So in this case, I'm going to call for 6 chicken thighs, bone in and skin on. You need all that because it all adds flavor to the dish. You're going to need salt and pepper. You need garlic powder. You need garlic cloves, which you're going to crush and then chop. You need honey, chicken broth, rice wine vinegar, and soy sauce. Now, here's what you're going to do. You're going to start by rinsing the chicken, patting it dry, season it with salt and pepper on all sides, and just set it aside. In a big skillet, enough to accommodate all the pieces, you want to heat up some olive oil on medium-high heat, right? When it gets nice and hot, you want to take the chicken, put it in the pan, and sear it, right? You want to sear it on both sides, and then you want to turn the heat down to medium, and then continue to cook it. It's probably going to take you another 20 minutes. You're going to keep turning the chicken. Don't let it burn, so stay close to the stove and cook the chicken for maybe another 20 minutes. You can put the lid on the pot to help it cook. One way or the other, it's probably going to be another 20 minutes for that chicken to cook. Don't let it burn. Remember, stay close. When the chicken is done cooking, make sure that you turn all the pieces up so the skin side is up, not down. You want the skin side to be up at this point. And now we're going to get ready to make the sauce. You're going to take your garlic cloves, of which you've got 3 or 4 garlic cloves, depending on the size of them, crush them with the knife, and then chop them, right? So they're kind of chunky pieces, and spread the garlic all around the saute pan. Now you're going to add in 1/3 of a cup of honey, right? 1/3 of a cup, 1/4 of a cup of chicken broth. You're going to add a tablespoon of rice wine vinegar, and you're going to add a tablespoon of soy sauce. You're going to just mix it all around. You're going to turn the heat down to medium. You're going to take the lid off because you want it to start to simmer. You want it to start to steam away, and you want the sauce to thicken up just a little bit. And you're going to cook this probably for another 5 or 8 minutes. You're going to tell because you're going to watch as the sauce kind of thickens up a little bit. You're going to take a spoon. You're going to be taking the sauce out of the side and just basting the chicken pieces, right? And when it's done, when you're ready to serve this, you may want to serve this you can serve it a number of ways. You can serve it family style. You can serve it on individual plates. If you're going to serve it on individual plates, I would serve it on a bed of rice. You can use white rice or brown rice. I would make a bed of rice, put a chicken part on it, take some of the glaze off, drizzle it over the chicken, drizzle it over the rice, and then serve it with a big mixed green salad of your choice. It's a great dish. It's not complicated to make. It tastes delicious. Everyone in your family will like it. So until then, until you make it, take good care, and we'll see you tomorrow.